Hey there, Matthew with forex-nation.com, going over the trade setup for this week, March 15th through the 19th. Um, Basically, the week started off at a difficult level for the euro dollar. This level right here, which synced up with last week's weekly R1, that's what this red line represents. This was where it began, and it didn't even want to go up anymore because last week it couldn't stay above that level long enough to close. So it fell, and by Monday morning, New York time, we had a crossover occur on the alligator. That was my first initial entry for the week. Entered right here, and as you can see, price action actually took a rally back up before it fell, but it did fall. You have to stick to your indicators. You have to place your stop loss above two forms of resistance. Those two forms of resistance for me was the two moving averages. So my stop loss was up here, and as you can see, it never even really got close to it before falling. Once it fell, it became overextended according to the envelope line here. It became overextended at this point, but it went all the way down to the weekly S1, which is typical, to the pip actually, before swinging and reversing back in the opposite direction. This is called a swing point when you have price action going one way and then sharply reversing in the other. So at that point in time, I put this line in. This became a support line that I put into my charts. I also closed my trade once it became overextended down here in this region, and waited to see what would happen next. As you can see, we had a decent rally going up here, and then it looked like we were going to see another break to the downside. Not only did I put this support line in here, I also drew this trend line in. Let me zoom out to show you why. Because we've been in a uptrend since last week. And at this swing point, I put the trend line right here so that I'd have a reference going into the future of where to look for another break to the downside. So what ended up happening after this rally up, it broke down and still couldn't go any further than the trend line, which I had drawn back here. So this trend line provided another entry, which I didn't actually take, but this was a bounce off of my trend line, and as you can see, price action rally back up again. At this point, I actually got in my next trade here, which is where the crossover on the alligator occurred. So right in this area, I got in a buy, and immediately price action zoomed up, became overextended. I closed my trade at this point before coming back down, bouncing off the red moving average. You could have entered a trade here if you wanted to. I didn't. Reason being, I didn't enter the trade when it came back down here because this was a very volatile candlestick down, and I wasn't too sure we would actually see price action reverse, and it did. So, no entry for me there, although since the crossover was new, meaning the crossover just happened, you could see there's a lot of momentum. There's a lot of distance between the red and the blue here. The blue moving average is actually outside of the envelope line, so that's a lot of momentum. And you can typically depend on the red moving average as resistance or support whenever you have that much momentum. So again, what I'm trying to say is you could have entered this trade, this bounce off the red. I didn't, though. I waited to see what price action would do. Now, what it did was it came up here, and this was actually where the resistance line was at that point in time. As you can see, I synced it up with previous week's resistance level, and that's where price action went again before coming down. So I actually entered a trade right here at 37.76 for a bounce off resistance. So I actually entered a sell here, and price action, it looked like it might go down, but it didn't. So I did lose money on that trade. It ended up rallying up just a little bit higher, and once it did, and then once it went into the 3800s, it then fell back down again. So I moved my resistance line up here. I was not in a sell yet because price action just couldn't make its mind up, and then we started to see the first signs of a sell-off. You saw the price action come down sharp like this, and your gut instinct tells you to go ahead and enter into a sell because this makes you think a trend is forming. But just as soon as you would have done that, you would have been faked out. That's why you have to wait for your indicators. The indicator, the crossover, did not actually occur until right here, which would have been a good time to enter the trade. I didn't enter a trade because I was thinking we were so close to this trend line that remember, this is the trend line I mentioned earlier. I was thinking what we'll end up doing is probably bouncing off this trend line and rallying one more time. And I even said that in my previous video for the for the week when I went over my trade setups. Is that's what I thought would happen, but you have to be prepared for both cases. You know, if it didn't bounce off this line, I also said if it doesn't and it breaks the line, enter a sell, because that's an indication that we're going to see a sell. If it does bounce off the line, you can enter a buy, but expect to see this thing meet resistance once again in the 3800s, right up here around our new resistance line. Well, what ended up happening was the trend line was broken. Clearly, it was broken right here. I entered a sell at that point in time right here on this candlestick open, and as you can see, it did not move against me much before falling off very well. It came right back down to around our S1, where previously in the week, the same level here, that's where it found support again. So you can see it's good to have support lines drawn on your graph, because that's exactly where price action rallied again. And then it bounced one more time before clearly breaking that support line. At that point, when it broke here, I entered into a sell here. Now you can see it's overextended according to our envelope, so I expected this thing to go against me a little bit. I had to set a very large stop loss. Well, I call it a very large stop loss. I don't like stop losses over 30 pips, honestly, but I had to enter a stop loss of up here about 50 pips in order to have my stop loss above two forms of resistance. And as you can see, it did rally and then fell, and then eventually came to meet my red moving average before dropping off again. And this is how Friday ended up. It just fell like a rock by the end of the day and broke another support line from a previous week. So where we stand now is a pretty crucial phase. I think you're looking at the signs of a possible sell-off going into next week. What to look for going ahead is, I'll zoom out here, this line is a very crucial line. This line at 34.62 is where price action has had a tremendously hard time breaking. You can see it tried 3 times in previous week to break this support line, and I don't think it even came close before then. But that's 3 times it's tried to hit that support line and break it and couldn't. So it'll be interesting to see if this time it'll work out on the 4th try, because I think what we'll end up seeing is price action going down to the 3400s again and retesting this crucial line of support. If this line is broken, you bet a lot of money on this thing going even lower, perhaps as low as 3100, because this is this currency pair is showing signs of weakness here. The dollar is looking good. There's a lot of data coming out next week regarding the U.S. economy that could provide even more strength for the dollar. And at the same time, Germany in particular has been voicing its concerns over the Greek debt. And each time they do that, it causes euro weakness. So next week's going to be an important week to watch both the fundamental and your technical indicators to determine where this currency pair is going. But again, going into next week, I would expect price action to drop down to this level before we would see another rally. And yeah, that's my predictions for the future. And again, nobody really knows what's going to happen in the forex market. So if you're listening to somebody who predicts 90% accuracy rates, or they say what they know to be true is what's going to happen, be careful with people like that, folks. There's no way to predict what's going to happen next. It really is a day-by-day, hour-by-hour type thing in the currency markets. One thing you can trust in is your system. Have a good, solid system with indicators that make sense to you and that you know how to read and predict off of. All right, good luck to you.